not want to, may or may not want to uh, have as a reason or goal. And also from a technical standpoint, I want to talk about time horizon. So time horizon basically is that point at which you want to start reaping, so to speak, the benefits of your investments. That time horizon could be a shorter time horizon. Maybe it's a few months. Maybe it's a year. Or it can be a longer time horizon. Maybe you're investing for 10 years, and in 10 years from now, you want to start to reap the benefits of those investments, or start to withdraw from those assets, and use that money to fund your lifestyle. So moving on, since we touched on investing and, well, the foundation, budgeting, goals, and our reasons for investing, I wanted to talk about what to invest in and how to invest. So one of the key things that I want to highlight here is that it's very important to know what you're investing in. That's a surefire way to lose your investment, or the things that you the assets that you buy, is to not understand what you're investing in, right? So there's tons of financial tools, education, that are out there for those who want to learn the basics about investing. But one of the things I want to touch on is, I think that there's a basic principle that we all should take into account, which goes back to the budgeting aspect, is the percentages that we want to invest, from our total income, right? So I like to call it living life on percentages, right? So again, going back to the reference of the richest man in Babylon, he advised, or gave wisdom, to his audience, that investing 10% or saving 10% of whatever you make is very, very fruitful, and wise thing to do. Again, the more that you invest, the more capital that you invest, the faster you accelerate the process of meeting your goals, right? So it's all based off a personal preference, right? Like I said, I'm on a journey called FIRE, financially independent, retire early. So I'm accelerating the process of my investments so that I can reach that financial freedom state, or reach my goals at a more accelerated rate. So going into investing in some of the key principles of investing is diversification and risk, right? So when investing, there's always a risk when it comes to investing your capital, or your fiat currency. There's always going to be a risk associated with investing. You can take, for example, to create an analogy of people that like to gamble, people that like to go to casinos, sports gamble, gamble on who's going to win the Super Bowl this year or next year. There's many games out there for gambling, right? Um, Me personally, I don't gamble, because I don't understand gambling, and I don't like taking um, chances in things that I don't understand from a technical point of view, right? For others, gambling is more of a fun thing, a pastime thing. Um, but to make this analogy, this point stick, um, there's a risk associated with gambling, right? Um, and the possibilities of winning a game, for example, blackjack, you take into account things like how many cards are in the deck, right? What are the possibilities of, I'll get closer to 21, right? In order to beat everyone else at the table, right? So that's an example of people who are or gambling or playing a game and analyzing the risk associated with gambling uh, by playing a game, right? There's a thing in sports betting called over and under, right? Um, and I'm not really big on sports gambling, so if I'm wrong here, um, correct me or speak up. And um, I believe the over is for people who want to, is for the team or the sports team that has the advantage, right? The competitive advantage to win the match or the game. Um, so the payout is usually less, right? Same thing with investing, right? To create this juxtaposition or juxtapose. Investing in lower risk uh, um, assets usually comes with a lower reward, right? I know we've all learned back in high school, most of us would take the economics class that the lower the risk, the lower the reward, and the higher the risk, the higher the reward, right? And that can pretty much be applied to many areas of life, right? Um, but it especially applies to things like gambling and investing, right? So how do we manage that risk? One of the key tools for managing risk is diversification, right? So not putting all your eggs in one basket, uh, as an old saying here in America, where we don't want to, put all of our capital into one company or one asset or one piece of property or one cryptocurrency, right? At the risk that it fails or collapses, and for example, a company goes bankrupt and we lose our initial investment, right? So diversification is very very key. It's a risk adverse tool that pretty much all investors use, whether they're day trading or whether they're a long-term investor like myself, right? Um, but also, I wanted to touch on here in America um, is tax savings accounts, right? So most people don't quite understand that things like 401ks, which are offered by employers here in America, um, offer a lot of you know, important benefits that um, many of us can take advantage of right here in America. 401ks are basically an investment account that your employer offers to their employees, um, and you're able to deposit money into it and buy assets. For example, a mutual fund, which basically invests in a bunch of different stocks from different companies on the stock exchange, and invest that capital from your paycheck, which can be done automatically, uh, and also reinvest the dividends that those investments or those stocks or bonds return, right, in terms of dividends and profit. So that's something that I'm gonna touch on more a little bit here, but um, 401ks, IRAs, and individual brokerage accounts as are tools or accounts that we can use to invest and have those and reap the benefits of those tax savings, right? Um, Also, I want to talk about where to invest and how to invest. So I want to share my screen again, and want to show uh, want to show your examples of how where we can invest and how. Um, what are the best websites out there? I think when I first started learning to invest on my own is Investopedia.com. Um, and this is a website that basically you can learn just about anything when it comes to investing, including the basics, right? Um, as you can see here, there's a lot of different articles that pop up, but they have a search function where you can go in and search for things that uh, you don't understand and you want to learn more about in terms of investing. And you just put in a simple prompt, simple request or search in the prompt. And uh, actually, I want to focus more on ETFs. There we go. But I don't want to look at these articles that are showing. Uh, Sometimes Google is the best way. So here's an example of an article that they update pretty frequently, as you can see, April 29, 2025. This is an example of a tool that we can use to learn, excuse me, to learn about investing. Um, and just to give you an example of an investment tool, um, exchange traded funds or ETF. And you can see that it gives you an example of what an ETF is. It gives you key takeaways, explaining like the underpinning assets associated with ETFs. And it also explains how it works and some of the things like the regulations that the SEC implements here in America, some of the laws that are related to ETFs or any type of investment vehicle. And you can work your way through and learn all tons of stuff about investing. Um, so that's one of the tools I wanted to show. So how to invest and where to invest here in America and in most countries in the Western Hemisphere. We have what's called the New York Stock Exchange, where most of the shares are bought for publicly traded companies here in America. And basically, a share is um, a piece of ownership within a company, a publicly traded company, right? So some of us have played the stock market game back in school where we learned about this. But um, in order to invest, things like I was talking about before, 401ks and 401ks that we get from our company, we have the opportunity to invest in mutual funds or index funds where we can buy shares from the New York Stock Exchange or other major exchanges where shares can be purchased. So that is one of the places where we can invest. There are other places like real estate, different asset classes like real estate. People who purchase real estate property. Um, we can go through real estate agents if you choose not to purchase property. Um, Investing in cryptocurrency. There are exchanges, centralized and decentralized exchanges that can be used to invest in cryptocurrency, or notably what I personally invest in, Bitcoin. Um, and there are many different places that we can invest in terms of cryptocurrency, different asset classes, right? Um, but also I wanted to show some more tools before I move on. Um, there's also a tool called or a website, IRS.gov here in America, where you can look up things like different laws and different regulations in regards to investing. Um, and I want to highlight this because this is where we really can take advantage as investors and use this as a tool to educate ourselves on things like specifically how much we can invest. And I brought this article up or this page up that talks about the limit increases, which tells us how much we can legally contribute to our 401k accounts and our IRA accounts, individual retirement accounts here in America. So as you can see this year for 2025, the annual contribution limit for 401k accounts is $23,500 per year, right? So us as individuals, and that does not include, by the way, that does not include what some people receive from their companies, which would be the employer match, right? So an employer match would be a match that your company invests with um, with you in your 401k in terms of contributions. So, say for instance, me personally, the company that I work for matches every dollar that I invest up to 6% into my 401k account. So it is a huge thing to take advantage of because you automatically double your investment out the gate, right, off the dribble. So for every dollar that you put in, up to 6% of your income, your salary or your wage, the company matches my dollar for dollar how much I invest up to 6%, right? So I automatically double my income off the dribble, and that match does not contribute to the limit that the IRS has set for investors here in America. Um, Also, the individual retirement account, which I also have and invest in monthly, is set at 7,000 per year. I believe that there's a catch up uh, a catch up contribution. Actually, it's right here. Uh, that that is a limit contribution limit for those that are I believe is above the age of 50. So employees 50 and older can participate in 401ks, 403bs, 437s, government thrift saving plans. Um, Remains up to $7,500 per year, right? There are higher catch-up plans for people of 60, 61, and 63 who participate in these plans. They can invest up to $11,250 per year. And there's a reason behind that, right? The reason behind that is because the older you get in terms of your investment life cycle or your investment path, the more you have to contribute in order to meet your goals or your time horizon, right? So the earlier you start, um, the more you can take advantage of compound interest, right? Reinvesting your dividends and you know continuing to contribute to your retirement account or your brokerage account or your IRA or whatever. Um, the more time you have to take advantage of that compounding interest, right? But the later you start, the less and less um, investment power you have because the time that you have to invest decreases and significantly, and you don't allow your portfolio to have that time to grow, right? So that's the reason why the IRS or the government offers a catch up contribution limit that is higher than the average contribution limit.